Hi, welcome back to Joe Blogs. In today's episode, I want to talk about Chinese power. And this time I'm not talking about Xi Jinping, the leader of the country. I'm talking about the generation of electricity. It's been well documented that at the start of this century, China suffered from power shortages as a result of the economy growing at a faster rate than its ability to generate electricity. However, those problems were put to bed by the building of a large number of coal-powered fire stations. And over the course of the last 10 years, power hasn't seemed to be a problem for China. However, in 2021 and 2022, China experienced power shortages, and this is an ongoing problem for the country. And clearly, given the fragile state of the Chinese economy right now, and the question marks as to whether it can achieve the levels of growth that it's aiming for 2023, the lack of electricity and the threat of power cuts could cause major problems for the Chinese economy. So in today's video, I'll have a look at the current breakdown of how China is generating electricity. And heads up, spoiler alert everybody, the majority of it is still coming from coal, and China is continuing to build more coal-fired power stations. We'll talk about the electricity shortages that China's been experiencing over the last couple of years. We'll have a look at the current utilisation rates, because one of China's problems isn't that it can't generate enough electricity, but rather it's struggling to generate enough electricity during periods of peak demand. We'll have a look at the regional breakdown of electricity generation and shortages. We'll talk about the costs of power generation and why the increase in coal prices has caused such a big problem for China. We'll talk about the problems and the challenges that the increased use of renewable energy is causing China. And then finally today I'll wrap up with my summary as to what I think is likely to happen in the Chinese power markets over the course of the next couple of years. This chart shows the breakdown of electricity generation in China in 2022. And as you can see, almost 2/3 of all of the electricity generated came from coal. Hydro, which is the creation of electricity using water, was the next largest generator, representing 14%. Wind came in at number 3 with a 9% share, followed by both nuclear and solar, which represented 5% each, natural gas 3%, and bioenergy 1%. And in terms of assessing the trend as to what's happening in the Chinese electricity market, this chart shows the total amount of electricity produced per year and the breakdown between 1985 and 2022. And this shows that over the last 37 years, there has been an enormous increase in the amount of electricity being generated in China. And the rate of increase in electricity generation really started to pick up pace around 2003-2004. And since that time, we've seen almost exponential growth. And as you can see from the large red section at the bottom of this graph, the vast majority of electricity that China produced over the last 40 years has come from coal. And the amount of coal-fired electricity is still increasing. As you can see from the blue section of this chart, China has been harnessing the power of water for the last 40 years, and the amount of electricity produced from hydropower has increased significantly over the last 15 years. This chart also shows that over the last 10 years, the amount of electricity being produced by wind, solar, nuclear and gas has also increased. So China is expanding its use of renewable energy sources, but the negative news from an environmental perspective is that it's still increasing its use of coal and natural gas. Since 2000, China's experienced 3 cycles of power shortages. In 2000, the region of Guangdong experienced a power shortage that expanded to the whole nation in the following 3 years. It led to the suspension of the power market reform that was started in the late 1990s, which aimed to create liberalised wholesale electricity trading markets similar to the Australian national energy market and the Pennsylvania, New Jersey, Maryland interconnection in the United States. In order to attract new coal capacity investment, the Chinese government increased the tariff level and introduced the on-grid coal tariff regime in 2004. The on-grid coal tariff is based on a single energy charge in terms of Chinese yuan per kilowatt hour and is supposed to be set at a sufficiently high level to recover the capital expenditure, operation and maintenance, and fuel cost of a typical coal plant. The determination of the per kilowatt hour tariff level is based on an expected annual generation hour of the coal plant. The on-grid coal tariff is then used as the anchor pricing point to set specific tariffs for other generation technologies, such as nuclear and gas. The tariff policy changes did manage to attract new coal investment in the following years, and the power shortage situation was mitigated between 2007 and 2009. However, the introduction of the on-grid coal tariff regime did not address the core issues that led to power shortage. Instead, it led to distortion in power dispatch and generators' incentives to generate electricity to meet peak load. Between 2010 and 2012, power shortages occurred across China, even during non-peak seasons. The average annual power demand growth between 2009 and 2011 was nearly 10%, driven by the large infrastructure stimulus plan after the 2008 global financial crisis. However, there was limited incremental energy supply, mainly because of the disincentive of coal-fired power plants to generate more power because the on-grid coal power tariff was not adjusted to reflect the much higher coal fuel prices. As a direct result of the power shortages caused by the disincentive of higher costs for the power companies, the on-grid coal tariff was increased in late 2011. This incentivised the rapid expansion of coal capacity, even as demand grew much less than expected in the following years, leading to excess coal capacity between 2015 and 2020. And the total cost of this oversupplied coal capacity to the Chinese economy was estimated to be in the range of $270 to $570 billion in a recent paper from the Energy Foundation. As we discussed at the start of the video, in 2021 and 2022, power shortages re-emerged in China for a variety of reasons, including seasonal spikes in demand and unexpectedly low hydro generation due to weather events like a cold snap in January 2021 in central China and hot and dry summers in 2021 and 2022 that affected water levels. There was also a lack of coal supplied to the coal-fired power stations and another misalignment of the coal power tariff and coal fuel price, which disincentivised the coal-fired power stations to generate more power to meet higher than expected demand growth. There was also a lack of capacity to be able to increase the peak flows of electricity, and China introduced dual energy policies in 2021, which led local governments to reduce power supply to energy-intensive industries to meet the dual energy targets. Now, despite the fact that China produces large amounts of coal, it is still a net importer, as it's using more coal than it can produce. And this chart shows the monthly import volumes dating back to 2015. The different years are shown by the different coloured lines. And apologies for the crazy nature of this graph, it does look a bit wild. But what I wanted to focus in on firstly is what happened in 21 and 22, and then what's happening now in 2023. The volume of imports in 2021 is shown by the green line, and it's probably easiest to see this if you look at the far right hand side of the chart, where there is a box that says 2021 in that colour. And you can see that at the start of the year, the volume of imports was relatively modest. And in the period up until June 2021, the green line moves roughly in the middle of all of these lines, so it was not an exceptionally high year. However, from June onwards, you can see that the green line then moves towards the top of this chart. So the level of imports was increasing rapidly as demand for electricity in China rose, and China therefore had to start importing large volumes of coal. If we now look at what happened in 2022, which is shown by the pink line, and again, if you look over on the right-hand side, you can see that 2022 is shown in a box, which gives you the colour of that line. And 2022 actually followed a very similar pattern. So in the first half of the year, the level of imports was relatively low compared to the other years. However, from June onwards, there was a rapid increase. And you can see that between September and December, 2022 was one of the highest years in terms of the volume of coal being imported. So this data really backs up what we've just been talking about in terms of the increased levels of demand for electricity in China, which is predominantly produced using coal. However, what I really wanted to highlight from this chart is what's happening in 2023. Now, if you look at the left-hand side of this chart, 2023 is actually very easy to see because it's shown in black, which is the easiest line to pick out, and also it's right at the top of the charts. So you can clearly see that in January and February, the volume of imports was one of the highest levels that China's experienced. However, in March, April and May, the level of imports is significantly higher than it's been in any of the other years shown on this chart, which indicates that there's been a strong increase in demand for electricity and that a large proportion of the electricity being generated in China is being done so using coal. And this chart plots the price of coal being paid by China dating back to 2019. And we've got three different types of coal shown on this chart. The blue line at the bottom represents coal with the lowest calorific value, so that means that it generates less heat when you burn it and therefore is less efficient and less attractive. The orange line shows coal with the middle range of calorific value, and the red line at the top shows the most attractive form of coal with the highest calorific value. And And what this chart demonstrates is that over the last 4 years, there has been a significant increase in the cost of coal. The overall trend for all three of these lines is upward. And if we look at what happened in 2021, during the course of that year, the price of coal more than doubled. There was a sharp increase towards the end of the year. We then saw prices coming back down. They then spiked again following Russia's invasion of Ukraine. They remained extremely high throughout the whole of 2022. And in 2023, we've seen prices coming back down, but they are still at a highly elevated level compared to where they were 3 or 4 years ago. And obviously, from China's point of view, this is very bad news. Because they're a net importer of coal, they're having to buy coal in the international markets. So when the price of coal goes up, that obviously increases their costs. And as China has continued to expand the number of coal-fired power stations that it's using, what that means is that overall the cost of electricity generation in China has risen dramatically, more than doubled over the course of the last few years. And as we've just discussed, the tariff system that's been set internally by the Chinese authorities doesn't allow the electricity generators to be able to pass on all of its cost increases directly to the consumers. So that means that those companies therefore have a difficult choice of either continuing to produce more electricity and making losses, or cutting back on their production to save on their costs, but therefore causing blackouts and shortages. This chart shows the layout of the existing electricity grids in China. Now, China is a very large country with a large population, and that population is disproportionately spread. And the diagonal line that's been drawn on this graph separates the east and the west sides of the country, and 93% of the population are located on the right-hand side of this line, which represents around 43% of China's land. So that means that 57% of the land is on the left-hand side, but only 7% of the population. And in terms of the industrial output, 94% of GDP is located to the right-hand side of this line. So that's where all the industry is, that's where all the demand for electricity sits. And as a result of those characteristics, there are large parts of China that are exposed to electricity shortages and blackouts. And this graph shows the breakdown by region. And the colour coding here shows the increased risk of power shortage. And this graph really highlights both the scale of the problem and the difficulties that the Chinese authorities have in terms of trying to manage electricity production and supply. Now, in terms of looking at the trend as to what's been happening over the course of the last 15 years or so, I thought it'd be worth looking at a case study for Guangdong, which is one of the most densely populated areas of China and one of the largest areas in terms of industrial output. And this chart shows the breakdown of electricity in Guangdong dating back to 2006. The grey section at the bottom represents coal generation, the brown section natural gas, the lilac section hydroelectricity, the blue section nuclear, the pink section wind, the yellow section solar, and the orange section at the top is the importation of electricity from other regions. And what this shows is that in every single year, coal has been the largest and most important source of electricity generation in the region. Now, between 2011 and 2019, there was actually a reduction in the amount of electricity generated from coal. And that reduction was partly offset by an increase in nuclear power, but also an increase in imported energy. And the problem that we've got with these statistics is that the imported energy is also being produced using coal. So whilst at face value it looks like coal is diminishing, actually, because the imported energy is coming from coal as well, it's actually still increasing. And if we look at what happened in 2021, which was the first time that China had experienced shortages of electricity for around 10 years, the level of electricity generation from coal started to increase again. Now, it has come down slightly in 2022, but the level in 2022 is still more than in any other previous year apart from 2021. And then, of course, you have to add on the imported electricity, which is also being generated using coal. And the other major source of electricity generation that's increased over the last 10 years is natural gas, which along with coal is a fossil fuel and therefore is bad from an environmental perspective. Now, in terms of analysing the cost of electricity generation, this chart compares the cost of electricity generation from coal, gas, solar and wind. And what this chart highlights is that gas is the single most expensive way of producing electricity in China, followed closely by offshore wind and coal, and solar is currently the cheapest form of electricity generation. However, there really isn't a great deal in it right now, but the forecast for 2030 and 2040 shown on this chart for solar and wind indicate that the cost of those renewable energy sources is going to fall compared with what's going on with coal and gas, which are dependent on what's happening with the price of those fossil fuels in the international markets. This chart shows the projected generation mix over the course of the next 20 years. So you can see that coal, which is shown in the grey section at the bottom, will continue to represent a significant portion of electricity generation. However, by 2040, it's estimated to be down to around 32 or 33%. But the thing to note about this graph is that the import of electricity from other regions is shown in the green section, and that electricity may well be generated using coal. So despite the fact that it's estimated to come down to around 33%, if you include the imported electricity, that would take the percentage back up to around 45%. And the rest of this chart shows that the next most important form of electricity generation is from nuclear, followed by wind, solar, and natural gas. So what's the summary and conclusion today? Well, I wanted to post this video because we've been talking a lot about the economy of China over the last few months. At the start of 2023, following the removal of all of the COVID restrictions that had been in place for 3 years and had been causing the economy major problems because major cities were going into lockdowns continually, it was expected that the Chinese economy was going to bounce back strongly and that we would see significant growth from China in 2023. And in the first quarter of the year, it looked like China had turned the corner. However, over the course of the last month or so, we've started to see very worrying signs of a major slowdown. China's total exports fell unexpectedly in May, and we're also seeing really negative signs coming out in terms of the Purchasing Managers Index, the level of imports that China is buying in, and of course those imports represent raw materials, which China then processes and makes into exports. So if the level of imports is falling, that means that we're going to see reduced level of exports in the future. And the reason that this is so important is that China is the second largest economy in the world. It's basically the world's manufacturing hub. So if China is slowing down, that's going to have a negative impact on the global economy. What I was looking to achieve in today's video was to move away from all of the external factors that are affecting China's economic growth and look at a major internal factor, the generation of power. Now, as we've discussed in today's video, over the course of the last 20 years, China has experienced long periods of power shortages. And the way that the Chinese authorities have tried to deal with that is by building more coal-fired power stations. Because the benefit of a coal-fired power station is that you can turn it up when peak demand rises and you can turn it back down when peak demand falls, which is very difficult to do with renewable energy. Solar power is entirely dependent on the sun shining and so only generates electricity for certain periods of the day. The generation of electricity from wind also fluctuates depending on how strong the winds are, and hydroelectricity is impacted by water levels. So when we have long, hot, dry periods, water levels fall and therefore the output also falls. So China has placed all of its bets onto coal. But the problem that the authorities have introduced is the way that they've set up the tariff system. Electricity generation is operated by Chinese companies, and those companies at the moment have a disincentive to produce more electricity at times of peak demand. Because the price of coal has risen dramatically over the course of the last couple of years, it's become much more expensive to produce that electricity, and the way that the tariffs have been structured, those companies will incur losses if they produce lots more electricity at times of peak demand. So the Chinese authorities, whilst they've been trying to protect the companies and the individuals in China, have really shot themselves in the foot because the way that the market is currently structured means that they can't access increased electricity when demand does peak. And of course, the other factor here is what's going on with regards to the international price of coal, which has risen dramatically over the course of the last few years. So as a result of both of those factors, over the course of the last 2 years, China has been experiencing power shortages. And as we saw from the data we looked at earlier, in 2023, China has increased the volume of its imports dramatically at a time when prices are high. So that means that the input cost of that coal going into the electricity network has risen, which is likely to cause further problems for electricity generating companies and may lead to more shortages and blackouts over the course of the next 3 to 6 months. And of course, this is coming at a time when the Chinese economy is already slowing down. So this is yet another factor that could hinder the progress of the Chinese economy during 2023. So the overall summary of today's video is that China has already started to slow down. We've seen that from the data that's been published over the course of the last 6 weeks or so. And internal problems surrounding the generation of electricity and the cost of coal are likely to cause more problems for the Chinese economy over the course of the next 3 to 6 months, and there is a strong possibility that we will see a major downturn in China during this year. So I'll keep you posted on any further news and developments. Hopefully you've enjoyed today's episode, you found it interesting, useful and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.